Good morning. This is Ken Long from Tortoise Capital with a collection of various case studies from our trading mastermind. And I want to start with a collaborative learning example that happens to look at some intraday trading with the regression line crossover pattern that occurred on February 26, 2014. Not so much on the pattern, but really just on the power of the collaborative learning in a mastermind. So this is an example of a trade that was offered for analysis and commentary in the live chat room, and the trader in this case was aiming for pattern number 1 in the regression line crossover, which is a regression line crossover from outside the river, which you can see happens here. He sets his entry at this price level. He has a stop below the swing low of the morning, or of the day, excuse me. The price is rejected at the edge of the river. It fails and takes out his stop for a 1-hour loss. And so he asked for some commentary on the trade frame and the setup. And the chat room discussion really focused on a couple other things that were happening earlier than this particular trade. And we said things to be looking for would include examine what's happening with the regression line 30 in each of these blue circles. In this case, the 30 has crossed over the Bollinger Band mean, and so the trend is up. We get an RLCO outside the river, and then the 30 crosses back over the Bollinger Band mean, and then the subsequent price action is down. So we think he should have a short side bias. And now, when we have these price patterns here, in both cases rejecting the Bollinger Band mean, what we really have is patterns number 2 and 3, which are after successful RLCO trades to this side, finding support or in this case resistance at the Bollinger Band mean is an indication that the downside trade is moving. And so inside this blue circle then what we have is the second rejection of price at the Bollinger Band mean, and he can actually get short in this first red circle with a stop above the Bollinger Band mean. Or he may have decided to wait for price to leave the floodplain, and which also would violate this previous swing low. So the second red circle is a legitimate entry in pattern number 2, and then the third red circle is a rejection of the previous swing low from that morning. Could also support a pattern 2 or pattern 3 entry to the downside. And so what we really want to see here is that this combination of information signals that we get is really showing us the way down, and that the trade is somewhere in here, and you can take your pick on which entry you want, but that's the move that we want to capture. Then when we have price has fallen outside of the floodplain with a long wick and a rebound, that looks like a bottoming tail, which ends up leading to his pattern 1 RLCO. We actually have the ability to have made enough markets money here to fund this first effort at a regression line crossover. Now his implementation of pattern 1 is perfectly fine here. This is a logical place for it to find support. It did before. It just so happened that it worked out to the downside, and he takes the professional 1-hour loss here. That was followed by his trade executed properly, which was after that second bottoming tail. He sees the conditions are still in place for a re-entry. In this blue region, that's price beginning to re-enter the floodplain. This actually is a Z trade because we had price fall outside of the floodplain, which is more than 2 Bollinger Bands away from the mean. And that actually is the alert for the Z trade. And then the entry is upon price re-entering the river, with the idea of aiming for the far side. So he still has a live regression line crossover outside the river, pattern 1 working, but he also now has a Z trade, and so he gets his entry at 31.37, 10-cent stop, cashes it up around 31.70, more than pays for the previous trade, and then banks here near the end of the day. So the deeper insights here come from going back to this analysis of the other things that are going on, and not just looking at this trade in isolation, but looking for other ways to understand what the indicators are telling us, and then to look for opportunities in both sides of the trade. That's the power of collaborative learning because the trader was looking at how he might refine his entries in and around here, and it's through the critical thinking in a mastermind that you get to a deeper understanding of some of the other context about what's going on. Shifting now to a quick frog example. This is a lot less cluttered. This is from February 26 also. This was actually the earlier trade that morning in TNA, and so this was the previous day's close. This is the open plus 30 minutes and then plus 60 minutes. So the quick frog starts firing around 30 minutes in, and our standard is to wait for one full frog standard deviation. In this case, it's $1.50. We have been experimenting successfully with waiting for just a half of a frog standard deviation, in this case 75 cents. So we find the low of the day, price is moving up, we get a quick frog entry, the accelerated quick frog here in the green circle, or if you wait for the full SD move, you get the move here. It moves directly up one full R and then starts hesitating. At this point in the blue circle, you've got 1 R in hand from the traditional mechanical quick frog. You have 1.5 R in hand from the accelerated frog. You get a half a frog SD pullback, which would get you out at this red. There's another probably an R to R1/2 available in the retracement move, but on the simplest form of this trade, you end up selling half in the blue, selling the other half here for 3/4 of an R, and that's on the traditional mechanical frog. Otherwise, you get a little over an R if you're using the accelerated frog. So a very simple strategy executed in a routine manner, and that's the quick frog. We then looked later in that day about what kind of market condition we have, and we're going to look at it through a regression line crossover lens. And this was part of our community discussion as we were trying to judge where the market was in the swing trade context, because that informs both our intraday trading and then some of our long-term trading for opportunities. And so we're looking at 2-hour charts here on SPY, and we have price at that time was right around 184.67. And we notice the river in the floodplain, and we've drawn some lines here. And the green line is where I want to be long without any question beyond 186.25, which was the all-time high. That's the two green arrows. So I have to enter on the long side not later than 186.25 if price should find support here and go. On the other hand, I see us in the middle of this great big congestion zone here that has been happening for 6 weeks, and there's a good reason why it could fail here. And if it fails here, it could look like this failed, because that's the last time it failed. It went that far, and so the trigger for that for me would be something like a violation of this previous sideways quiet channel, and then this support level here at I'm willing to get short at about 183.20. I'd be willing to add a short if it failed through 0.2 at 181.60. I really want to be double short at that point. Then it's free and clear all the way down to this next congestion zone. You can see the volume and then the price chop here. I think if it violates 2, it goes all the way to 3 in a hurry, and then if it hesitated here, I would cover. But if it fell out of that congestion zone, I'd be looking to add a short position at 4 again, with the target of getting down to these next support levels down around 5. And so that would simply mirror the previous swing that occurred on the last fail. Well, that last fail also supported that rebound trade, regression line crossover, moving back up to the support levels and resistance levels that it had previously experienced, and we made some good swing trades and intraday trades in there. So what we've done at this point, as we were approaching the last hour and a half of the day, was we were trying to appreciate what the end of day traders were seeing, and then framing the market from some of these price levels in this time frame so that it could inform our intraday trading the next day. So we used the regression line crossover framework to inform our market condition and market status, or trade location, we also call that. Okay, now shifting to a regression line crossover pattern quiz. We do this periodically to reinforce some of the lessons learned, and so this one is an RLCO trade frame. We're looking at 3-minute charts on VXX is the symbol, And in each of the blue circles, we would ask the question of our RLCO traders, what's going on inside each of these blue circles, because that has specific information content for us as an RLCO trader. And the green circle indicates that we actually took this trade on the long side when it got to here, but it was set up by some of this information. And so what we would say is in area 5, we're looking at a sideways quiet channel breakout to the downside, alerts us to this. At 3, we have support or resistance at the far side of the river after a successful RLCO. So we have a successful RLCO trade that came this way. It finds it is successful in this direction on the short side, comes back to the edge of the river, and then gets rejected and starts failing again. That's what we mean by resistance at the far side of the river after an RLCO. And so area 3 is a place to get short again, or to add to your position if you're already short from 5. It moves down to 6 and 7, and at 6 and 7, not only do we have the exits for these, but we also have an Anderson regression line stretch because price has fallen well out of the floodplain. The regression line stretch just says we've got this maximum divergence between the regression line 10 and the regression line 30 that allows Kim Anderson to buy at the regression line 10 and sell the regression line 30. The Z trade, which is number 7, is simply that we have price has been out of the floodplain for a while beyond 2 standard deviations, and we have to enter not later than point number 1 or 1.5 right up in here, where price has re-entered the river. We have to enter not later than that point for a pattern 7. Well, at pattern 1, we also have a regression line crossover system confirmed, so that's actually an entry right at the edge of the river. At 2, what we have is support at the Bollinger Band mean after a successful RLCO. This is a successful RLCO pattern. It entered the river, got past the Bollinger Band mean, and then has failed to fail. So that's actually a pattern number 2. We can start thinking about buying the breakouts, and that aligns with a sideways quiet channel, but because by this time we've had enough price action on the favorable side after this fail that now the price, the 10 period and the 30 period regression lines are all inside the river. The Bollinger Band mean, the river is almost flat, and now it's breaking out from the river. That's number 5, sideways quiet channel, my favorite pattern. And so that's a quick walk through it, how we use quizzes to test our understanding of the RLCO framework. And these kinds of quizzes allow us practice in learning how to read what's going on in the context, not just get fixated on the price action here, but to understand the context within which that trade is going to operate. So now we can shift back to February 28th. We just have some trades from this morning, and this was the open, and this was a continuation pattern of the previous sideways quiet channel breakout. So after only a couple bars of additional information and upside potential, we have a sideways quiet channel with an entry at 81.70 in this region here, with a 40-cent stop below this previous ribbon swing high. So I like this right below the midline of the dragon. That's a 40-cent stop. It actually works in our favor. This is that entry a little bit later in the day. We get an immediate run up. We can get to no lose in a hurry. We get a second leg up, and when it takes out this previous ribbon swing high, all signs point to yes, it's out of the floodplain. The 10's out of the floodplain. The 30's out of the river. This is all upward mobility. The Bollinger Band mean is pointing up. There's no resistance overhead. The S&P was above 186.25, which was that previous from that earlier swing frame that we did. So this is free and clear to the upside. So we get a second entry at 32. Oh, I'm sorry, this is XIV, but the same pattern trade. This is 31.77 on the entry. It's not unusual to see XIV and TNA working together. But then we have a second entry at 32 with a 20-cent stop, and we get our exit here as the RLCO is forming. Price is coming back to the edge of the river, and we've got 2R in hand. We like that one. And so that looks, the TNA trade looked very similar to that. It's not unusual for them to work in tandem. That actually worked out. Same pattern, got a second entry in. It ended up being a little over 3R. but you get the main idea. So that's just a continuation of the previous swing trade expressed intraday using the RLCO framework. So that's everything I want to cover. Thanks for your kind attention. Remember the power of collaborative learning and mutual support to improve our critical thinking and to improve our trading practice. So keep your powder dry and your risk measured.